What's up, everyone? We are back with a fresh round of stocks giant investors are buying. This is where the 13F reports to the SEC get released to the public, and we're then able to see what stocks the giant rich elites have been buying in the most recent quarter. And what a better way to kick things off than with the infamous BlackRock, the absolute largest asset management company in the entire world, who, being led by CEO Larry Fink, when BlackRock makes moves, it absolutely affects the market and our favorite stocks in a big way. So let's not waste any time. We got to take a look here at the 5 largest stock purchases that they just made, and I'll give you my own opinion on each one of them, and I'll even rank them from best to worst too, based on that opinion, to make it a little more fun and interesting as well. So make sure you're subscribed, by the way, because we'll be looking at other giant investors' portfolios soon too. But with that said, I can't wait to share these with you. Let's go ahead and jump straight into it. All right, so counting up here from smallest to largest position in the portfolio, well, coming in at purchase number 1, and this is in relation to each other in the 5 stocks. Well, purchase number 1, we have CRH, ticker symbol CRH, who BlackRock has been kind of slowly adding to over the past year, but then just decided to go ham on it out of nowhere in Q2, increasing their position by over 1,000%, bringing the stake up to about $2.7 billion, and yet that's still only worth 0.06% of the entire stock portfolio. That's how incredibly large BlackRock is. Anyway, if you've never heard of CRH, well, they're actually a very large building materials company, and one that I've actually been keeping an eye on myself these past couple years, because I really like how strong and dependable their business will likely always be, as they mostly serve the construction and manufacturing sectors, providing things like granite, limestone, sandstone, cement, concrete, asphalt, and more. Plus, they offer services for these areas like construction, pavement, and many other things too. But yeah, that's just a business that isn't very easy to break into. It's very specialized, very capital intensive. You have to really know what you're doing there. You need experience, you need the right connections, you need size and infrastructure. It really is just the type of company that you would probably expect a giant like BlackRock to invest in, because of how dependable that business can be and how much the world will likely always need them, right? Plus, keep in mind, BlackRock plays a huge role in construction and overall development to many parts around the world. So I have a feeling that they're very knowledgeable about what this company does and the market they operate in. So it's just kind of a no-brainer for them to be investing in it too, especially as societies around the world really grow larger and become more developed, which benefits CRH greatly, as they already hold more market share leader positions than really anyone else in both North America and Europe, with even more locations spanning across about 30 different countries worldwide. The results being that their financials are pretty strong, with the only dips occurring during times of macroeconomic slumps that are mostly out of their control anyway, like the 2020 lockdowns, where so much of the world was, of course, forced to shut down. But soon after, they recovered to new record highs and are still expected to post mid-single-digit increases to revenue in each of the next 2 fiscal years. One concern I do have, though, is our high interest and mortgage rates that do tend to discourage lending and spending on big projects that would normally benefit CRH. However, so far it hasn't really affected them, as far as I can tell, in a very big way. And so with the Fed likely to now start lowering rates this year too, at least that's what most people are expecting, well, I do think that BlackRock might be betting on CRH here to potentially see a surge in demand, hence why they're buying up the stock so heavily, or at least so much heavier this latest quarter. Of course, a lot of this is still speculation though, and I still think that a recession is not off the table for the macroeconomy, so it may not be the safest stock to buy at the moment. I'm personally holding off on it myself, but I can see why others want to be buying it for their portfolios, especially when the valuation is slightly cheaper than the sector, with also a low payout ratio for their dividend that yields 1.8%, despite the stock trading near a record high. I will just say though, that stock has dipped at many times in the past, and for me, the company really is a bit too low growth for my taste, with also too low of a dividend yield to really get me excited enough to buy in near a record high stock price. If it was dipping, I would probably buy some, but for now it's kind of a soft pass for me. I'll still give it a pretty good ranking though here. I'll put it in the middle at number 3 until we see what else is on this list. Speaking of which, moving on to purchase number 2, we actually have another gigantic increase here with a stock that I've never covered before on the channel, and that is GE Vernova, ticker symbol GEV, which BlackRock increased by over 419,000%. So I'm guessing it was a very small position that they increased on it, bringing the stake up to over $3 billion. Now, if you've never heard of GE Vernova, well, it's probably because they were just spun out recently from General Electric earlier this year. So I'm guessing BlackRock had some type of early stake, probably from owning GE, I'm guessing, which gave them some GEV shares, perhaps, and then they probably just decided to increase that position by a large amount this last quarter, which I don't blame them on. GEV does look very attractive from a business standpoint, being heavily involved in the electric power industry worldwide, doing everything from generating, transferring, converting, storing, manufacturing, and even servicing everything to do with power. And this includes practically all forms of it too: gas, solar, hydro, more than a quarter of the world's entire capacity there for GE Vernova. But they also have both onshore and offshore wind generation, which is expected to see a lot of growth, by the way, as the world expands into the oceans and starts to utilize all of that unused space. And they even do nuclear as well. So they really do it all, and there's lots of potential for the future in several of these areas. Of course, energy is a massive market, and it'll see even more growth from renewables too. These aren't areas that I think will ever disappear. So from that standpoint, or at least not anytime soon. So from that standpoint, it is very attractive, I would say, to own GEV stock. And while revenue growth is relatively low at the moment, around a mid-single digit rate, their profitability has shown huge improvements over the past couple years, turning free cash flow positive this past year too. And of course, they're just getting started there, which is why the valuation looks expensive on current ratios, but on a more forward-looking PEG ratio, well, they're actually a bit cheaper than the sector too. The price itself, though, is already up over 35% from IPO, which I would actually be fine still purchasing some of that even at those levels. However, I already own NextEra Energy, who I happen to like a bit more, and they also pay a nice dividend too. So I don't plan on buying GEV at the moment. However, I do think that it's a decent enough long-term stock overall. Hard to rank this one though, putting it up against CRH, but I think I'd give the slight edge here to CRH just because it'd give me more exposure to, or I should say any exposure to something new in my portfolio, as opposed to just having another energy stock. So I'll bump them up one spot to put GEV in at number 3. Okay, moving on though to the third purchase. Well, we actually have another energy stock, except this one is a lot heavier into oil and gas, although they are investing more heavily into renewables recently too. But that is of course ExxonMobil, ticker symbol XOM, which they increased their position on by adding over 30 million more shares, bringing the stake up to almost $35 billion. But gotta be honest with you guys, this one is even less appealing to me than GEV, as they are, in my opinion, not nearly as diversified into renewables as GEV, more so kind of just a huge player in oil and gas with #1 market share in America, according to Mortar Intelligence. Probably also in like the top 5 worldwide, I would say, which is totally fine, by the way. I'm not knocking them for that. Oil is still very important these days and will continue to be for some time, but I just think that there is probably more growth opportunities longer term in renewables, which again, I own NextEra Energy for that. But even if I did go with a top, like 5 oil producer, I would actually prefer Chevron instead, who still has a huge market position. It's #2 in America, but in my opinion, they have better investments into renewables, notably the $10 billion they're spending through the next few years on green projects, including carbon capture, as well as hydrogen, which could be another $1.4 trillion market opportunity by 2050. And Chevron already has the largest hydrogen storage plant in the entire world that both stores and uses it to produce electricity. I will say though, Exxon is doing some impressive work with carbon capture, but the stock is already up to a record high, while Chevron actually dipped this past year, leaving them with not just a cheaper valuation, but also a higher dividend too. So I just think there's some better options out there, and I'm gonna put Exxon at the bottom for now because of it. All right, moving on to purchase number 4 though. Oh yeah, easily my favorite of the entire list here, that's for sure, in the giant, mighty Amazon, ticker symbol AMZN, which they added another 10 million more shares of, bringing the stake up to over $125 billion and worth 2.8% of the entire portfolio. And look, I'll keep this very short and sweet. We all know how massive and dominant Amazon is, yet the stock actually dipped 15% this past month, leaving it trading near the same levels it did all the way back 4 years ago. And that had to do with earnings that just missed analyst expectations because of lower average selling prices from their online store, given the weak economy where people are just choosing to buy cheaper products. But that's a ridiculous excuse, really, to be selling the stock. Guys, this is just another example here of investors being greedy, because if you'd actually look into the report, you'd see that the numbers were outstanding for their size. And by the way, I love to buy a stock that's falling because of really no fault of their own. Amazon isn't doing anything wrong. It's just the macro environment that they're operating in. But from their own singular business perspective, they are absolutely on fire. In fact, sales for the quarter at close to $150 billion for a single quarter was still up by a double-digit percentage. That is insane. And mind you, AWS, their most profitable segment, is now making up close to a fifth of the company's entire business. And despite it already holding #1 market share in the world, well, they still grew by almost 20% year over year. That's very impressive. And if you think, all of that is really crazy to see, well, look at the trailing 12-month figures. Sales are now doing over $500 billion, and yet are still growing by 12%. I mean, that's unbelievable. And even crazier than that, look at their profits. Now, they are really barely starting to put any emphasis on them, yet free cash flow, it's already up to over $52 billion on growth of 572%. Guys, name me one company in the world that is doing over 52 billion in profits, and that increased it by like almost 7 times larger year over year. It's incredible. It can't be matched, really. So when I get comments from people saying that Amazon is a bad stock to invest in, I just want to show them a single screenshot like that and see what possible reaction a bear could have to that, because it's mind-blowing numbers. Anyway, the company is on fire and they still have many ways to grow even more in the future, especially on the bottom line. So with the market cap at like half the size of Nvidia and Apple, who I actually think they should be worth more than either one of those, well, I like the stock even here, and I've been a buyer myself. It easily gets the #1 spot. All right, with that said, though, we do have just one more purchase here to run through, and that happens to be not only the largest holding of the 5, but it's not the largest for their entire portfolio, but out of the 5, it is the largest. And it also happens to be my #1 largest holding, though, out of my entire portfolio for myself. And that is, of course, the mighty Microsoft, ticker symbol MSFT, which BlackRock added another nearly 8 million more shares of this past quarter, bringing the stake up to nearly $250 billion at over 5% of the portfolio. And look, I've been talking a lot about Microsoft lately, so I'll just make this very simple. It's very similar to Amazon here in that it's another dominant company that is absolutely on fire, but has also dipped slightly. It's not as big of a dip as Amazon. It is still trading really close to an all-time high too. However, it did at least dip about 11% this past month. Also due to earnings, by the way, that again were actually phenomenal in my opinion, but just didn't satiate enough the hungry mouths of Wall Street. Despite the company doing some of the absolute best sales though, and especially profits in the entire world, which they're also growing both figures by a double-digit percent on the top and bottom line, despite that massive size. And this latest quarter showed even more of that, with Azure consistently growing by around 30% or more year over year, with most other parts putting up incredible growth too, especially Xbox and gaming, now reaching a combined over 500 million monthly gamers thanks to the Activision acquisition, which by the way will soon add Call of Duty games, including the newest entry to Xbox Game Pass, making the subscription service even more valuable and just adding even more recurring revenue for the company, on top of other services like Office, Cloud, and even artificial intelligence, which they are currently experiencing more demand for than they even have capacity. I don't like the valuation though quite as much as Amazon at the moment, so I'm giving Amazon the very slight edge here and keeping them at #1, but Microsoft follows very close behind at #2, and I'll push the other ones just down one spot to fit it all in. But yeah, that'll do it for my rankings here. Let me know if you agree with them or if you would make any changes. Overall, I think it's a pretty interesting quarter by BlackRock. Obviously, we expect them to keep adding to dominant winners like Microsoft and Amazon, but the heavy additions into construction and especially energy do look interesting, and I can't really fault them for any of those pickups there either, even though my moves would have been a little different. I think there are better alternatives, but that's just my opinion. Anyway, let me know what you guys think down below. Drop your comments there. Try to respond to as many as I can, but yeah, thanks for stopping by, my friends. Thank you for all the support. It means so much to me. I hope you're all doing well, and I will catch you in the next video. All right, take care, everybody. Bye-bye.